Okay, folks, so we need to talk about something that is very, very incorrect. A specific narrative that has beat down one specific stock to oblivion. And I want to make a strong case for why I think it's a good dip buy. And the other thing I want to talk about is, of course, an update on plays as well as the latest take profit plays. And the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with some updates. Let's start with AMD. Now, AMD is an AA plus high conviction play in our price targets list with a price target at $100 to $110, and now it's at the upper end of that range. Of course, if you're unfamiliar, we have two different types of plays. We have short-term plays that we play based on the chart, and then we have price target plays, which are our high conviction plays that you buy if there's a lot of room to get to that price target, and then you sell when you get to the price target, or you let it run a little bit over that, but you make sure that you take that actual price target as the value. And then when it hits that price target, you can either upgrade the stock to a higher price target based on the fundamentals of the company and a combination with the momentum, or you can decide to lock in profits. And with the last couple of trading days being huge for AMD, well, it's hit its price target thanks to a blowout of earnings and booming demand for, of course, computer processors. And while I strongly believe that AMD is on a very, very strong growth trajectory for the next decade, really, the truth is that it's been a very, very challenging market for high growth and tech plays in general, which means that I'm a lot less greedy in terms of upgrading price targets. Unless you're doing buy and hold and just forget for decades, I really do believe that the best way to play a lot of these plays is just buying in fair amount below the price target and then riding it back to the price target and then sort of rinse and repeating. Of course, in certain funny markets, you're going to end up buying and holding for a while anyways. So a lot of times it's really useful just to have that price target and then just have that as the bearing for when you're going to enter and exit. You exit at the price target, and of course you enter at a very, very low price relative to the price target where risk versus reward makes sense. So at this time, I'm going to say, hey, you know what? AMD hit its price target. It did what it needed to do, and I'm satisfied with it. I don't need to raise the price target into the euphoria. If you want to ride the euphoria, you could always set a trailing stop loss. The other price target that hit today was Square Payments. This is another AA plus rated conviction play that we placed a price target on it at 280. And since it's hit its lows in May, it's gone from 190 to 280 at highs today. Now, today's rally was largely fueled by earnings, but there's also something else going on here behind the scenes that you need to know about. Backing up a second, what the heck does Square do? Well, there's two major components of this. There's the merchants, one where Square is helping merchants process payments. When you go to a restaurant or a store and see the Square logo, well, that's a merchant that is using Square to help them with their payments. And then the second component is, of course, their Cash App, where Square helps consumers pay. And with the different variety of monetization options that come with being the little slimy little middleman, well, they've grown their gross profit 91% year over year, largely driven by growth in providing payment services to both small and large scale businesses. But what's very, very spectacular here, where they are really shining, is with mid-market sellers. This is a niche that shows some of the strongest momentum, yet is also one of the most lucrative niches for Square. And yes, I do have to admit that I'm very, very biased on Square and always have been, specifically because it's led by Jack Dorsey. And of course, I tend to overly favor any innovator who's really focused on doing bold, consistent actions that other people don't think is a good idea and then achieving results with that. It's honestly just a simple fact that if you want to have growth rates that are higher than the rest of the market, well, you got to be doing something that's different than the rest of the market. You have to be doing something called innovation. I know, shocking concept. What do you mean you're not just rewarding hedge funds and Wall Street institutions with quarter over quarter results so you could just shoot out some easy money to them? To be fair, hedge funds aren't really that interested in the quarter to quarter. Hedge funds are too busy walking around without shorts and then pretending to the SEC to have shorts, and then the SEC agents are like, hey, there's all these guys from hedge funds walking around naked. I see something down there that I don't like and I don't want to see, but I still have to pretend that they got shorts on. How does this work? I didn't sign up for this. I signed up to be a officer of the law of the markets of stock. Anyways, as I was telling the viewers this morning, what I'm very, very excited about in terms of Square is that they just made the bold move of acquiring Afterpay, which now makes them a lot more competitive with the likes of PayPal. Now, the reason is because of this rapidly growing market called buy now, pay later. Interesting data that you may not know is that millennials overwhelmingly don't like credit cards. They overwhelmingly use debit cards as compared to previous trends of the last generations. And so Afterpay essentially targets those customers by providing a lot of the benefits of credit cards, like buying something now and paying later, without a lot of the drawbacks of credit cards, like carrying balances or high interest rates. The way that it works is you buy something, you pay it back in installments, and if you're on time, you don't have to pay any fees. And if Square uses Afterpay to provide buy now, pay later services to its millions of Cash App users. That's going to be huge. And I am going to upgrade this price target, but I'm going to wait until the euphoria dies off and we get a little bit more settling, because right now it's done a great job. I want to see a different iteration where it sells off, and then we have another opportunity to get back to a higher price target. It's a delicate balance to respecting the overall market condition and a lot of the rolling FUD that we have, and also respecting that a lot of these companies are worth a lot more. Okay, NIO, XPEV, and Lee all continued a strong growth trajectory in terms of deliveries, yet NIO slipped a bit, actually delivering less than XPeng and Lee did, which was fairly surprising. But if you actually look at the data, hey, the trend is pretty damn strong overall. That being said, while today was a healthy day for NIO, it was a nice win for XPEV. XPeng is certainly starting to take some ground and get closer to NIO. Okay, next, briefing play. So we haven't seen a lot in terms of hype euphoric runs, but today we did see some picking up. DLPN reported a partner deal to provide large-scale consumer-facing NFT marketplaces for entertainment and major sports brands. Of course, the NFT sector as a whole is kind of a rolling euphoria sector. Euphoria comes in out of nowhere, and then it goes away, and then it comes back. So that's one of the trends, or at least keywords, that I look for in terms of trying to scout out catalyst plays in the morning. It sold off into open and then bounced from the 860s to 1305. INFI was pretty nice. It was up on JP Morgan, raising its price target and excitement over its cancer treatment. Something like a 30% gain on the briefing or a 38% gain on the day. In terms of other takers, EVK was probably the best today. It had a 5 million share buyback plan. It sold off into open, bounced off the red directional SMA line, going from 380-ish to 622. 63% bounce from the red directional SMA line, and a 43% bounce from pre-market briefing price. Now, of course, as you know, you can get our daily morning briefings, our price targets, and our lessons on strategies in ZipTrader U. Cough, coupon code FUDSTOPPER50 if you want to get $50 off. But you know yourself, if you're somebody that has the discipline and doesn't really need that structure, well, there's a lot of free resources online too. Okay, now it's time for the stock of the hour, Pinterest. So Pinterest is a company that did extremely well during the pandemic as everybody was stuck at home fiddling on their computers. And the narrative now is that it's becoming substantially less valuable because people are going out and they're done with the internet and they're done with a lot of these companies. They don't have time because now they're enjoying the great outdoors and they're never going to go back indoors again. And thus, on the last earnings, Pinterest got beat down like a rabid dog. Dropped very close to 180-day lows, which means now I'm very excited and I'm licking my chops. Revenue was up 125% year over year. They beat earnings per share expectations by a whopping 92% overall. International revenue was up 227%. And people are saying Pinterest isn't going to work in other countries. And their guidance is that Q3 revenue is supposed to grow 40% year over year. Quite frankly, they are doing great. So why the drop? Well, one big reason, monthly active users, MAUs. See, in the US market, monthly active users has actually trended down 5% year over year. And while it's gone up 9% overall, the US market is the one that investors are worried about right now. But what they are forgetting is the bigger picture here, the context. These numbers are comparing it to the base effect of 2020, which, if you remember, in 2020, internet usage skyrocketed. There was a massive shift in consumer behavior last year that led to a huge shift in terms of increasing engagement for Pinterest. Taking away that situation and then isolating out the data to just look at this one data point is really incorrect. Now listen very, very closely. This is what's very, very important here. What is totally being missed is ARPU, which is average revenue per user. How much revenue each of these active users is generating for Pinterest. And take the US market. ARPU is up 103% year over year. So it basically doubled. In other words, Pinterest, it may have had a 5% temporary reduction in monthly active users, but the users that it does have are now worth twice as much as they were last year. Imagine you are a gym owner and you have the opportunity to choose between having 100 gym members all paying $20 a month or 95 gym members all paying $40 a month. Which one are you going to choose? Obviously, the 95 that are paying twice as much. But Wall Street doesn't see that. They're just focused on the MAUs, which are the monthly active users, and they have no idea what the actual context of the data set is and how much better this business model for Pinterest is looking. You may have slightly less customers, but revenue per customer is going up dramatically. It's doubled. If you look back at previous quarters, the big argument from Wall Street against Pinterest was specifically, hey, we don't like their monetization model. They're not making as much as Facebook and Google and Twitter. But now they've managed to massively scale up their monetization model, and I believe they're going to continue to do really well with that. And when user numbers start going up again, well, each user is going to be worth a lot more than the users that were lost. Okay, Charlie, but wait. shouldn't we be worried that there's less users now than there were a year ago? The company reports that virtually all of the difference is due to the decline in MAUs who use Pinterest on the web. These are users that tend to be less engaged and generate less revenue than those who visit our mobile apps directly. However, and this is the important part, in Q2, monthly active users on our mobile apps grew in the US year over year and over 20% internationally. So what does this mean? Well, it means that they're seeing a reduction in crappy users that generate little to no revenue, and they're seeing an increase in users that actually engage in the platform and generate a lot of revenue. So you're seeing a reduction in bad customers and an increase in good customers. So while Wall Street is yelling, hey, you gotta sell Pinterest, you gotta sell Pinterest, specifically because users are going down, they forget to actually separate the trash users from the good users. Pinterest, in terms of good, valuable users that generate a lot of revenue, they're doing really well. But in terms of bad users that don't need to be there in the first place, they're doing bad. Yet Wall Street can't tell the difference because Wall Street doesn't care. It's a tech company. Sketchy. Social media companies are a scam. This company's number one priority should be getting more valuable users and figuring out how to monetize them to the highest extent possible. And that's what they're doing. And yes, some of the numbers are slow and we are coming off of a huge change and shift in consumer behaviors. But I think that this is a very, very unique opportunity because it's down so much on what's really a completely incorrect narrative. Do I think that Pinterest is going to have massive, massive beats next quarter or the quarter after? Probably not, but it's going to get back on the right trajectory. And very soon, just like the last 3 beatdowns of Pinterest, you're going to see, hey, this didn't really make sense to be beat down this far. Anyways, folks, that caps off today. If you have any questions, feel free to reach out to us below or join us on the lovely ZipTrader Circle Facebook group. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course, our daily morning briefings, where we brief on all of our favorite catalysts each and every single market open morning, well, we'll go ahead and put a link to ZipTrader you below. FUD Stopper 50 will get you $50 off before checkout. And if you're wondering what brokers to trade these stocks on, well, we like to send new traders over to Webull. They have a great free stock promotion. They have a great platform, and you can get all of that just by clicking the link below. Anyways, that caps off the video, and I'll see you in the next one.